right, welcome to the Closing Beat. Happy Monday. Yep, got the day right. It's hard to not get a Monday right. Hope you're having a great day here today. This is just our quick stock market update show that we do. Cover the good, the bad, and the ugly with the stock market. It's been easy lately. The markets have just been sort of trending higher. We'll, of course, cover all of that. Couple updates here. If you missed us last week, we're doing a new game. It's called Guess the Dow. You go to the website, guess where you think the Dow will close next Friday, and if you win, we'll give you $100. That's simple as that. It's not a marketing pitch, nothing, anything like that. Just you guess, you win. Otherwise, we won't email you, sell your emails. We won't do anything. Just play a fun game. If you're one of our customers, we'll credit your account. All the information is on that website below that you see on the bottom right-hand corner of your screen. Also, next Monday through Wednesday, there won't be any closing beat, but I'm still working on some pretty cool videos that I can post. In the meantime, I will be out of town, but I still want to have some fun with you guys. So we'll do more detailed, sort of market-oriented type videos and see if it's something we can help you with there. Also, our class this Thursday is all the geeky stats on market losses, how long it takes to recover from your losses, how long you should expect to see losses over the lifetime of your investments, all that sort of data. So I'm looking forward to that. All right, let's get started here. So look at the right-hand side of your screen. You got the Dow, another 70 points. S&P, another 13. Nasdaq, 81, beating the Dow. What happened here? So over the weekend, basically, we have the Mexico-China deal. Mexico-U.S. deal. We got a deal, right? So no tariffs on Mexico starting today. And that started the markets higher. But if we go over to the dojo and take a look at some of the charts here, you got the S&P 500 running up a straight vertical hill. Imagine climbing up a rock wall. You can't climb up a rock wall forever without taking a break or finding a place to just pause and catch your breath. So today we had that again, right? We had the markets just sort of moving higher. Actually, is that the correct? Might be missing a day in there. Let's see. Yeah, it's missing a day still. But so moving a little bit higher here today, but I'll use that same example. You're running up a hill. You're going to run out of steam, right? So when you look at the stock market today and you hear people on TV or financial media going, yeah, we were higher, but we lost a lot of steam. Well, sure, of course we lost a lot of steam. The markets had already pretty much conquered this whole sort of uptrend here, erasing over half of the gains, or over half of the losses from May. So it's totally normal for the markets to just find a moment to breathe. Even if all week this week it sort of breathed out, right? And just sort of took a little bit of a break or went sideways. Nobody would care. It'd be perfectly normal. It would be normal for, the financial media to say, what's wrong? What happened? Why'd the rally stop? Just overdone in the short term. Everybody that wanted to buy, bought. Last week for the Dow, it was a perfect week, unbeaten, as they say. And so today that continues. Hasn't had a losing day in over a week. So you've got obviously a little bit of room until we make new highs there, but that's pretty much where we're at, looking pretty good. The Russell actually got beat last week, so he can't say the same thing. But anyways, S&P 500. Last week, the average stock in the S&P 500 was higher by 4.14%, something like that, right? 4.1%, meaning take a look at every stock in the S&P 500. Look at their growth from Monday of last week to Friday. The average return was over 4%. That's impressive. Now, if you look at the stocks that have sold off more aggressively, energy, initially it was healthcare, right? But look at the stocks that we would say are relatively weak. And so let's give you an example here. Like limited brands, relatively weak stocks. So if you go digging around and go, which stocks are not participating in the market's rally, but more importantly, which stocks participated more in the decline in May. And so when you find those stocks averaged a gain of 3.6% last week, meaning they did great, really. I mean, that's above average for selling off so far. The stocks that we consider relative strength, right? 3.9%. Right, so stocks that were already sitting at the highs, your Salesforces, Microsofts, things like that, they were already super strong. The markets, yeah, they sold off, but last week recovered just a little bit more. That's a long way of me basically saying that this was no longer, like last week was not a stock picker's market. It was a broad-based grab everything and move higher. Typically, you don't see that. When the markets have a long stretch, like a month or two where they decline, people go and they hand pick the areas where they want to try to guess the bottom. They don't just broadly buy the overall stock market. And basically, that's what you saw was people just last week buying the stock market. So very good. That's why you have the average stock in the S&P 500 up 4%. Very impressive. Now, 4%. That's way above average for a 1 week return in the S&P 500. stocks in the S&P 500, that's very, very above average. So again, it leads another sort of thing to say, if the markets stay calm this week, you wouldn't mind. Wouldn't really be all that big of a deal. All right. Looking at the S&P 500 now, 55% of the stocks in the S&P above the 50-day moving average. 1/4 of them are in the financial sector. I'll use the XLF just for fun, but it doesn't mean just the big banking stocks. It's your regional banking stocks, your insurance companies, et cetera. 1/4 of those stocks are all financial related. So that goes back to our class last week there for customers there. The financials being sort of undervalued or fairly close to fairly valued right now. Tech stocks come in third place as the number of stocks above their 50-day moving average. Very nice little rally in tech stocks. More of a uniform move there if you were paying attention in the tech space there, meaning broad, right? Not just your software as a service, not just your hardwares and stuff, just as a broad tech-based sort of rally there, looking really good. 52 new week highs today. You got 62 of those stocks. The issue there is 10 of them, or 11 really, 11 of them didn't close at highs. So you have 62 new 52-week highs, meaning they hit new highs there for the last year, 112 on Friday, but the stocks that hit new 52-week highs today finished off of the 52-week highs. Again, normally we'd look at that and go, uh-oh, something's wrong. In this case, you look at that and you go, oh, because we ran up so far. That's all it is. Ran up too far, too fast last week. It was exciting. The stocks that hit new 52-week highs, just where's the energy to get them to keep going? They don't have it, so it pulled back a little bit, all but 11 of them. Not a big deal. Two new 52-week lows today. One of them was limited brands I showed you a minute ago. The other was also in the retail space. Let's take a look at some of the sectors. Now, with the Mexico-China deal, naturally you want to look over at Mexico. What's going on there? So EWW is the most popular ETF to look at Mexico if you like playing that category. Here's where it finished, right at the 200-day moving average, basically right back to where it started. This is prior, right here, is prior to the tariff announcements, sold off. Now we've solved the deal. We're less than 1% above where it started there. So it's a good move, but basically you didn't make much of a profit if somehow you were able to guess that. If you've been investing in Mexico, it's basically been a big choppy backwards mess there. All right, moving on. You got gold. Gold pulling back as well, totally okay, right? Had a great run, very extended in short term. Your gold miners, junior gold miners, everybody in that space pulling back, so totally normal there. Had a 5%, over a 5% gain since people started kind of freaking out there. And so a normal little pullback. Bonds also pulling back just a little bit as well. It means your interest rates are moving just a touch higher. As this pulls back, think of this being the opposite of interest rates. So across the board, bonds pulled back just a little bit. Rates ticked up a little bit. I don't think that's a big deal. It is sort of a big deal for names like, or the sectors like the utilities and REITs. Utilities were already overpriced and overvalued, so our customers already knew Thursday night what to expect there. Just something that we review with them. If you use, it doesn't matter. You could use like FREL or ICF to look at the REITs. It just depends on your personal preference. All down a little bit today on the slightly higher rates. So no big deal there. Now, look, sectors that are extended in the short term. Basic materials, this was your best performing sector last week. It was the 9%, just over 9%. So that one's already overextended in the short term. You wouldn't mind if that pulled back. Home builders, just a little bit extended in the short term. Consumer staples, we've been pointing out all last week. Great little rally to recover all of that, all the loss there. Consumer discretionary, same thing, little extended. It already started pulling back a little bit today, and if that continued, then no problem there. And tech stocks, a little bit overextended, especially as you dig through the category there. A lot of stocks overbought, at least in the short term. Healthcare continues to break out of its downtrend, so that's a good thing. I know a lot of you have been paying close attention to that sector, and it paid off, right? The patience has paid. Here's your downtrend breaking there. We pointed out each day that happened for you. Here's another example, though. Even though it broke out, that's not fresh energy. You know what I mean? Like if it had moved sideways and then broke out, okay, that's fresh energy. To me, this is okay if it wants to just calm and pull back for a little bit as well. If it stays above the 200-day, I think that's fine. I think you'd get a lot of people really excited about that if that's what happened. We'll keep track of it. Relative weakness, if you're looking out there, retail still relatively weak overall compared to the market, and anything energy or oil related, here's XOP or oil and gas exploration companies, and XLE, just to throw it in there, relatively weak. You can see if you compare it to anything else that's almost recovered all of the month of May's losses, or at least half of it, XLE just hasn't done it, man, hasn't done it. All right, individual stocks here, and then I'll take your questions. I'm sure one of the questions is going to be Beyond Meats. What a day, right? At its highs today, almost 100% gain in 2 days. Naturally, I mean, it had to get to 200, but you could see it was on its way to try to get to 100% gain in 2 days. If we back, this is as far back as I go, actually, new IPO here. So this puts the company at a valuation of about $10 billion. They lose money, so they'll make no money this year, no profit to pay anybody, but they're worth $10 billion. This is a great example of people getting very excited in the short term. It's also a great example of how people exit their massive short positions, because that's a lot of short covering in there as well, if you happen to be tracking that. But look, just overexcitement here. And people that don't even ever ask me about stocks were texting me today saying that their friends had asked them if they would text me and ask about this new stock called BYND. So I have 4 text messages today because of that. One of them was from an old landlord way back in the day. So that just goes to show it's a little bit of hype, a little bit of excitement right there. You know what I think about it. I wish them the best, but no way I could be interested in that. All right, Alibaba. So over the weekend, Barron's likes to try to grab your attention. So Mondays, I always like to put your attention on what they said in case you don't pay for a subscription or anything. They have some good analysis in there. I don't work with them in any way. I just keep up with it. Alibaba, about 3.5% gain on the day. There was an article in Barron's that just said, take the trade war thing and you can count all that in here. Who cares? The stock is still has a good valuation at this price point. So the stock was higher on that news. Barron's also said, by the way, this whole deal with breaking up the big tech companies, your Googles, Amazon, and Facebook and such, is way, way, way overblown. They said, just, as far as the stock price being sold off there, they think it's still a good deal. I wrote one more down there. Oh, they said JP Morgan was a good buy as well in the financial space. So kind of leading to some of the things we talked about there with the sort of fairly valued stocks in the financial space. Barron's said JP Morgan is, quote, a solid bet at these price levels. Their words, not mine. All right, so that's that one. In the news, you're going to see Raytheon, RTN is a ticker symbol, which broke out today. Technical traders love that. Even though it finished off the highs, I still love that. Raytheon's going to be, Raytheon and United Technologies are going to merge. Not UTZ, sorry. UTX is the symbol there. So both of those stocks, those are 2 massive companies, by the way, looking to get together. So a lot of White House commentary and a lot of sort of opinion on that. But at least you know what that's all about. They're going to merge, or they want to merge. Shutterfly up 2.5%. Was it Apollo? Apollo, yeah, this was the one. Apollo is supposedly going to buy them, Shutterfly. Apollo's a private equity group that's looking to do that. Oh, and Tilray, everybody's little pot stock there, was up 11% today. Why? Because there is the guy that owns a lot of shares of Tilray, and they've been convincing him not to sell his shares. So when there's a new IPO, it's like a 90-day lockup period or whatever they decide, where insiders can't sell their shares until the end of that lockup period. It is pretty rare that you would go to one of the insider shareholders and ask them not to sell their shares. It means they have indication that you are going to sell your shares. They asked him not to do that. I believe he owns 75 million shares, if I remember correctly. Anyways, they got him to agree to extend the lockup, meaning they essentially got him to commit to not selling those shares. Which, if you kind of look at the stock price, like, what was he going to do? Like, look at shares that went from like $100 down to like 40 today. So he's probably like, all right, give it a little more time. Let's see what happens there. Also, Uber in the news over the weekend. It wasn't really today's news, but the stock was lower by 3.5%. They're losing their chief operating officer and marketing officer. But that came out over the weekend, so the stock just responding to that a little bit today. I believe that's about all I have. Yeah, Lewis says, here we are again. His portfolio is up 20%. Should I sell to lock in profits for the year? What if the markets go up 25%? What's your goal? Is this like a short-term portfolio where you just trade, or is this sort of a retirement-based thing? Is it a long-term investment? Where are you at there? If it's a short-term sort of active portfolio, I don't know that I'd sell everything, but 20% is pretty sweet. I think I'd be looking to take some profit. If it's a longer-term portfolio or like a 401k or something, I really hesitate on playing those games. You may contribute less or smaller amounts towards it because you're not getting that discount, but I really wouldn't sell anything, no. Which is not advice, by the way. Thanks, financial investor. Oh boy, moving on. What do we got here? The fake meat thing. Yeah, I see a lot of comments from you guys on the fake meat thing. I wish them well. Like I said, it's one of those things that, but any company that gets overvalued, I got to point it out. I mean, it's not at this point having an opinion. It's just, you got to sort of bring that to the forefront. That bugs me a little bit that, I did the same with the pot stocks. When we did all that whole thing, it finally got to a point where even the guy on TV, the, what's his name? Wall Street, he's the bald guy. I can't think of his name. I know who he is, but I can't think. Kramer. Even he got to a point where he said, guys, you got to be careful with these pot stocks. You got to understand the valuations. He never does that, by the way. He's just always very sort of upbeat and bullish. Nice guy, a little loud, but he's a nice guy. So I kind of want to do the same thing. Like Beyond Meats, it's a great idea. There's other competitors. It gives room for Impossible Burgers to go public. If they decide to do that, they got some stuff to get straight there. But I love the concept, but not at that valuation. So think of me as like Kevin O'Leary on old Shark Tank. Like, no way. No way I'm paying that, nor would I ever suggest anybody pay it. We'll see on the trade war thing, right? Remember the only real opinion I guess I have to offer. I just thought that if the markets head higher, right, and we go into that G20 meeting, there's no meeting, there's nothing good there. That's when Trump goes, hey, the markets are near highs. I'll just go ahead and slap China with the other 300 billion, and even if the markets fall 10%, it's not so bad. So I still think that that's a possibility there. Thoughts on the UTX Raytheon merger? It's so ironic, man, because over the weekend I actually watched the documentary of Skunk Works, going way back to the first jets they built, all the way into now where we're at with the stealth fighters and everything, and the guy that ran that and how he made the decisions, and it was pretty cool. But it's just ironic. You wake up and you're like, oh, you guys are going to merge now. That's crazy. I don't know enough about that, to be honest, to say whether that's a good deal or a bad deal. I honestly like when there's more companies competing for business versus less companies competing. Not that I have any say about it. That's just my opinion. Spearhead, thank you so much. I don't acknowledge it, really. Just another year, another few wrinkles. Tesla, you think Tesla's going to be a big deal? I mean, it continues to do well. Same thing. I wish them well, but that's tough as well. Yep. Jake's got the right idea. Yeah. Their meeting's tomorrow. Tesla's thing, I thought that was next week. Are we already mid-June here? I guess so. Whew. Time flies. All right, what else do we have? The Goldman Sachs has a healthcare conference going on this week. That'll get some attention. It's not like headline news or anything, but that'll be some attention there. H&R Block reports earnings tomorrow. It's set up right to break out. Do they beat earnings? If so, that thing breaks out easily. I'm not telling you what to do with it, but that's that sort of setup ahead of earnings pattern. Kind of cool there. Other than that, we have, that's about it. You got some light economic news coming out tomorrow. That'll pick up as we go through the rest of the week. Oh, Salesforce is buying Tableau. I don't really keep up with Tableau, so we'll maybe leave that to you guys there. Anyways, that's all I have for you. I hope you enjoy the rest of your day. Light start to the week, but it does pick up as we go, so we'll be sure to do that. And take a minute, guess the Dow. Why not? Next week. It's where do you think it's going to close next week? The date is now listed on the form, so you know when you're guessing for. Friday, we'll announce the winner. Who's ever closest without going over, we'll send you $100. Enjoy the rest of your day. Yep, that's it. See ya.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.